Martin from Secret, the channel for learning about trading and investing. Today we are going to learn something new, right? And this is mainly from the investment point of view. It's related to the hedging and the portfolio building with the help of the options, right? So cash secured put, CSP, right? Cash secured put is a very popular investment strategy with the help of options puts, right? So let's get into and see what exactly is that, right? So what is cash secured puts? It's very simple, right? Or rather, if you're aware of what the options are, the assumption here is that you're aware of what derivatives and options and how to trade the basics of options. So basically, it's about selling the options put, right? Options are put and calls. It's about selling the option put at what strike price? At a strike price of a stock that you want to invest at, right? The price at which you desire a stock to be eligible for your investment purpose, right? You sell the put at that price, at that strike. That's exactly what cash secured puts are about. Now cash secured puts help, right? They also get you a regular income. It is not just an investment strategy. It helps you to get a regular income during the wait period for an investment, right? So that's a key thing. Two things. So we would be getting to see the details in the next slide. So why do we need a cash secured put? So investing at a lower price is always a desire of investor, right? And along with that, if you're getting a benefit for that wait period where we are looking for a lower price, right? So there are basically two types of investment. Trading, momentum trading that we often talk about is about buying at a higher price and then selling at even higher price. So this is about investment. We look for the dips always, right? You go to a price where the price gets corrected, undergoes correction, and then takes a support and moves from there. So that's a point that we always look for. But many times, either you would miss that because it would come very close or near to your support, somewhere near, and then moves up, or it may go. It's very difficult to catch the dips, right? Basically, so this is one very efficient method of benefiting from getting a stock at a very lower price. At the same time, in case you're not getting that price at your desired price and you don't want to invest because the market is shooting up and you benefit for that waiting period. During that waiting period, you make money. So that's because the price is always unpredictable. You can never catch the dip, as I said earlier, right? But your money that you are ready to invest in the next 3 months or 4 months or 1 year, it's blocked there. You just can't move the money and deploy it elsewhere because you never know when you have to invest, right? So during that waiting period, you gain profit from doing a CSP, cash secured put. At the moment it comes to a desired price, then you get it at a desired price also, and you can benefit if the stock is performing later at some point in time, right? So that is why you need a CSP, right? If the alternative to not having CSP is just assume that the stock will fall further down and wait for it forever, keeping your no profit, no returns for your blocked money, and then once it comes you buy it, right? Which may or may not happen, or you buy it at current price assuming that this may be the bottom, and then later find that price moves 10% further down. You never know, right? So these are all scenarios that can be tackled with the help of this CSP. So there are two ways of using the cash secured put. So one way is use the Nifty index, right? As you know, Nifty index can be traded with the help of options, right? So you would do a cash secured put, that is, you will sell a put of Nifty index of a particular strike where you look forward for the market to dip to, For example, you may want the market to take to 16,000. That's when you would like to invest in a particular stock, right? So this stock may be the part of the index, not maybe, it has to be part of the index that you are trying to do the CSP on. So the assumption here is that when the index or the market, index represents the market's cross section, right? When the markets fall down or the index fall down, then naturally all the stocks in that also would be impacted likewise. That is assumption. So it has got the options in the Nifty has got enough and more liquidity, and so there is no question about having doubting on the trading of the index on the Nifty. That's one. Another way is to directly do the CSP on the stock itself. But here you have to mention that you have to make sure that the stock is a very high liquid quality stock, right? So we will see the details of both. So first it will be investing in the stock, doing a CSP in the stock itself. So the main questions that comes is, when you say sell a put of the stock, at what strike price do you sell it, right? How much you have to sell and all these things. So that is answered in this slide. So for example, they take ICICI Bank, you want to invest so and so money, right? But you're ready to, you think that the price may be appropriate for the stock only at 650. Right now it is 719. So you would like to buy it at a dip of 650 only. So if that is the case, then what you would do is essentially you would sell a you'll sell a put of ICICI Bank, right, for the current month. I'm putting April because March is almost over. So April 20th, April monthly expiry of ICICI for 2022 at the desired price of 650 put. You're selling the put. So to sell the put, the lot size for ICICI Bank is 1375. So if you multiply that, you'll find that you'll have to spend 11,345 rupees, right? Is the premium, right? Is the premium for selling that, right? So the margin, so the cost is, so the cost incurred is that the margin for doing that CSP is obviously 1.5 lakhs is the margin. Now, so many things could happen. At the expiry of April 28th, the ICICI Bank can fall below or at 640, or can remain above in a sideways, not moving much, somewhere in the 700 range itself, or it could shoot up to 800. So all of this can happen scenarios. So you would need to think about investing in ICICI Bank only if it comes to 650 and below, right? So if it comes to, suppose, imagine that if it comes below 650, then your cost will come to, so you would need to make sure that 8.9 lakh or 9 lakhs, 9.05 lakhs of rupees has to be there in the bank, because, right, the 650 price, that is the desired price, multiplied by the lot size plus the cost that you incurred for 11,000 for the CSP, right? The purpose of that CSP was to benefit if it is moving up, right? And that cost is now a loss. So adding up, it will come to 9.05 lakhs. So in case the second scenario where the market did not close below the 650 and then moved up, then the maximum benefit that you can reach is up to 11,344 rupees. You can benefit for nothing, for just, so that's the interest that you get paid for waiting for 1 month, anticipating that a dip may happen, which never happened, and you benefited still. So that's kind of a rental income, regular rental income. So you can roll it over for the next month. So now what if if you had not invested using CSP, it's not CAP, it is CSP, sorry. So 719 was the current price. You would have bought it at the current price and then multiplied the lot size, right? And then you would have essentially, you would have essentially, saved 83,530 in the total investment that is required. If you had bought it now instead of implementing a CSP, then you would have benefited this much rupees, right? So that is the advantage, right? So you don't buy at a price that is available in the market, without knowing whether the market will move which side, right? You would wait and then get the benefit and then sell it at a price where it falls to your side, and you benefit at buying at a lower price anyway. So this is payoff chart for the ICICI Bank, if you see. So you can see that the maximum profit in case it does not fall below is 11,000, and if it is total capital size, all that we discussed is, so as long as the market is moving up, you benefit. If the market is falling down also, if it comes to your, if it comes to your desired price, then you would take the delivery or square it off and invest the money. Similarly, so the second method, as we said, is to implement a cash secured put in Nifty instead of directly in the stock. So how do we do that? So why do we do that? I already explained, because Nifty is the market representation of a cross section of the market, and if that is falling or moving up, its similar impact is expected in the stocks that constitute of the index also, right? Doing a cash secured put on the Nifty options also is a strategy. So here the cost would be coming to around 30,000 would be the cost that may be incurred, right? Similar, because the December, so when you are doing the Nifty, right, you would going for long term options, right, not the current ones. So December 29th, 16,000 if what you are actually, so you are assuming that you are ready to buy ICICI Bank when the market, if it falls to 16,000. So 16,000 strike of December, right? December month 2022, put option you are selling, 50 is the lot size for the Nifty, so 30,000 is the cost that is incurred. Margin required is more or less the same, 1.4 lakhs. Now the cash that is required, if you are to invest, is 8.3 lakhs, right? And in case the market continues to move and close above 16,000 in December, then you get a 30,000 clean. That's the rental income that you get. In case it falls below, you would go and buy, right, the ICICI Bank, right, for the amount. So this amount 8.3 would be more or less sufficient for investing in the because this contract value is more or less the same, 8.3 and 8.3, one lot of Nifty and one lot of means 1375 size, one lot of 50, more or less the same. In case the value is less, you'll have to divide with the contract value. If the contract value of the stock is less, then you have to divide and then buy as many lots. So number of lots depends on the capital size as well as how big or small is the stock that you are buying, right? So that is how you do the cash secured put using the Nifty. You can do it both ways. So here the chart for the same is given here. You're selling the Nifty, which represents the market as such. You are doing the options, selling on that, and then benefiting from it if it is further moving up, and then coming out of it and then investing the amount, assuming that we will get a ICICI Bank at a desired price at that time, right? And according to how the market is falling that much, you would know that the stock also will be moving down likewise. Now, which strike price to sell in the CSP is very important. So how do you, suppose you have a stock you want to invest in, right, Infosys or any quality stocks, TFC or whatever, so you would have to understand the technical analysis a bit. You would need at least to know how to see the previous resistances, supports. So technical analysis has to be applied, and various techniques are there, support resistance, pivots, and Fibonacci, and different methods, right? Momentum. So different methods can be used to identify the support and resistance level. So determine the price point where you think, if at all there is a correction that is happening, where the price may pull back to a certain level. You can use Fibonacci retracement levels, pivots, like I said. So you can identify at a place where you think it is a very strong support, and then market could bounce up from here. So in order to have the confidence to say those stock that you are analyzing should be a very high quality stock, fundamentally and technically. Basically, technically, of course, since we are technical analysts, technically it has to be sound, right? A sound stock which does not fall just like that, and so that is very important. Otherwise, your support resistance technical analysis may not work. It may fall beyond your control, beyond your level, and then you will incur losses. Yeah, that is one thing that you have to be cautious. Now, what stock to invest? Of course, that's a continuation of what I said. It has to be Nifty 50 stocks itself if you are selling the CSP in Nifty 50. Even otherwise, if you are selling the stock directly, puts you are selling and doing a CSP directly also, you have to ensure that it is in a Nifty 50 stock. F&O listings will be better. It will basically have more liquidity, good strength, and quality stock is the only thing that we have to consider from CSP. Do not go for uh, poor quality, highly volatile kind of stocks, right? Highly liquid quality, good strength stocks only you go for long-term investment, and only that you go for a CSP approach. There are two ways of doing the CSP investments. One way is at the end of your expiry of the put or the option put that you have sold for the stock or the index. At that time, for the stock, basically you just square it off and take the loss, whatever losses, and because the price has reached the point where you're ready to invest, and then now that amount that you had set aside, invest the stock. Another one is don't square off, take the delivery of the put option with this desired price, and then make sure that account has enough money, and then so the thing is delivery has got some complications. Squaring off is better method. So, few points to notice. Yeah, so you may get lesser premium for the strike price of the current month of the stock at your desired price, if you see. Right? So in case the market does not take a dip and continuously keeps on moving up and up, you would benefit, but you have a limited profit. You have a defined profit that only that much you can get. You had seen that 11,000 was that price here, if you're taking April. Suppose you want to increase that, what you have to do is you have to go for an ATM, right? An ATM of the next month. Right now we had taken the price of the desired price we had taken. So instead, if you can go for an ATM of the next month, then you will get a larger premium. That is one approach, and that is something that you can apply if you may like to. And taking the delivery has some complications involved from the procedures with the stock procedure and all that. So normal square off and taking that loss and then investing is a better option. Rolling on subsequent, because you do a CSP on an index or a stock, you would want a purchase of investment in the stock, but you may not get that desired dip this month. It may happen next month. So what you have to do is end of the month, square it off, and then take new position on the new left tenders, new desired price and new strike price, new premiums. So keep on doing that every month. So every month you regularly book your profits if the dip has never happened. So sharp decline in the stock price at the expiry would be a very big concern, because you would end up buying in a stock at a 10 or 20% below what you had hoped it to be at a desired level. Means the fall, it's kind of a crash happens, means then you have a problem. So always be very cautious in the kind of quality of the stock that you have. And if such a thing happens, unfortunately, then you would have to have protective strategies that you have to apply to, that is outside the scope of the CSP. Right? You'll have to use option strategies that can hedge your falling strikes. Right? Now, stocks, has to be in the Nifty 50, right? Of course, that's all. It has to be quality stocks. That's a wrap up of what I want to do. Hope this helps you to build your portfolio. So this is the best option that you can look forward, instead of blindly buying at any price that you see. So, study this. The first step would be to study the stocks well, technically and fundamentally, and if you're confident on the strength and quality and liquidity of the stock, then identify the levels and supports, and then don't blindly buy at whatever price you get. Right? Look at the support resistance, find a level where you think that the price is reasonable or of value for you, right, and which is good supports, and then when that price comes in, go for a buy. Until then, you take the benefit by selling the put at the desired price. So that's what CSB is all about. Hope it helps you to in your investment journey. If you like it, please subscribe and share it to your friends, and put in your comments as well. Right? Thanks for watching. Happy trading, happy learning, happy investing.